My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today our special guest is Matt Iverson, zooming in from Colorado. Matt's a very interesting guy, very, very successful realtor and broker for decades now, done hundreds, if not thousands of transactions over the years. Yep. And until recently, well, no, not recently, but for quite a while, he was like a lot of realtors and brokers, very good at helping other people buy and sell properties, but wasn't investing that much himself until his accountant gave him a wake-up call. So we're going to dive into that, talk with Matt about what he's up to, what he focuses on as an investor, and how he made that transition. So Matt, welcome to the show. Great to have you.
Thank you, Dave. I appreciate being here. I'm excited. I love this stuff.
Yeah, good stuff. So Matt, maybe zoom out and tell me two things. Number one, what does the real estate investing look like these days? We're recording this at the beginning of October 2025. So what do you have in the portfolio? What's your buy box? What do you like? All that kind of good stuff.
You bet.
And then let's talk a little bit about the realtor side of things and how you match the two.
Yeah, absolutely. Well, so a lot of what I'm focusing on right now is multifamily. And that really came out of my brokerage side, as I spent a lot of my time as a residential broker, a lot of resort stuff in the ski resorts of Colorado. And so when I started looking at opportunities, and you alluded to, my accountant kind of kicked my butt and said, you're a great broker. You really need to start investing in property. And a lot of what we've done is not just brokering, but we would also build and develop and build homes and resort homes and fix and flips around the resorts. So everything we did was equity based. You buy it, you fix it up, you flip it. And so we were not a very tax efficient system.
Yeah, so that's what I was thinking. Your accountant said, "Hey, Matt, you're making too much money and paying too much tax.
Yeah,
start buying some stuff, start investing."
Exactly. That's exactly how it went. So he and I went down that road, and he gave me a lot of education on how it worked. And so
what year was that, Matt? When was that you?
So that was back in 2020 is when we started that conversation. And I bought
not that long ago then.
No. In 2021 we bought our first project. 22 we bought a couple more. And I started as an LP in two projects, and then we are general partner and an LP in three other projects. So, so I started like everyone, just get my foot in the door, see how it works, and then decided like I really need to I'll go all in on that. And so that's what I did.
So it's a big switch from, sounds like you're helping people buy and sell resort properties, single family home type stuff. Big switch going into multifamily, especially as a limited partner, not being the guy in charge, that sort of thing. What was some of the learning curve that you had with that part?
Well, I think a lot of it was finding the right projects. I'm very aware from my brokerage years that how buying the wrong location or the wrong product or putting the wrong product in the wrong location can be detrimental, but finding the right product and putting it in the right location can be fantastic. So learning multifamily, that was a big learning curve is what makes one project really successful and what makes one project fail. Right. And there's a lot of things that go into it. That's a very nuanced answer, but that's generally what the learning curve was what makes a great real estate project. And fail, I can tell you what when a house will be successful or not. It's CSD out, across the street, what kind of programs it needed. But I did find going into multifamily was that the drivers were similar. At the end of the day, you're providing a place that people call home. In Vail, it's a second home most of the time, but you're just really trying to learn to get into the mind of the end user. So for me, as a broker, how do my second homeowners want to use the home? As an investor in multifamily, how do my tenants want to use the property? And so getting into your end user's head is very important. That's a skill set I learned early on as a broker, and I was able to apply that to multifamily. It was an easy transition.
Yeah, that makes sense. So the multifamily properties that you're invested in, either as an LP or as a GP, what's your preference, size, location, sort of thing?
So I've focused a lot on 100-unit projects, plus or minus. That's a middle market. I'm not competing with the big institutions in that market, so I'm not going up against the Blackstones and BlackRocks and the Kid McElroys of the world. I like that middle market. My primary target right now is actually the Southwest, Phoenix. I've looked a bit in Salt Lake City. My family has a house in Phoenix, so we spent a lot of time. I know the city inside and out. I think it's got a lot of future growth. It's had recent shrinkage in their pricing. I guess the drop in their pricing due to interest rates and inventory that's getting eaten up. But the long-term prospect for Phoenix is pretty strong.
Yeah, so I don't see that population base shrinking significantly anytime soon. Yeah.
Yeah. No. Yeah. And there you go. So that's the key to multifamily, population growth, income growth, job growth.
Yeah.
And it pretty much works out.
Okay. So Southwest 100-unit type properties.
Yep.
Now the other big switch is going from LP to GP in projects. So as a general partner, as one of the active guys in these deals, what do you focus on most, Matt? Are you what's kind of your specialty within that mix?
So I have a pretty good sense for picking out properties. I've learned the nuances of location. So anytime I look at the property, I drive around and see where the traffic patterns are, where the shopping centers are, kind of what happens. I look for parks, I look for clean neighborhoods, things like that. So I tend to focus. Yeah, exactly. So I'd say my skill set is kind of, I look at it from 30,000 feet, and then I bring in the specialist to start looking at the details. You kind of, I grew up in the business. I mean, literally I've been in real estate since I was 12 years old. My family's been doing it for 40 plus years. So you kind of have a sixth sense. So that's what I do. I look at the properties, I pick them out, we underwrite them. And then I happen to like the program, the programmatic side of it. So I look at, okay, how can we improve this? How are tenants potentially interacting with the property, and how can we make it more attractive to them?
So what is that programmatic? What is that? Maybe give me an actual example.
So we're looking at a project right now. It's a new build, 30 units. Yep. And so there's not a lot of physical value add, but when I walk around, there's no outdoor grill set and tables for their tenants to come out and enjoy and socialize outside. And so when I talked to my local property managers, they said, well, in that particular location, people want to socialize. We need to offer them so we're going to, if we get the project, we'll put a couple grills in, we'll put a pergola in. Even as simple as the pool has no furnishings or furniture around it.
Yeah.
It's just a pool. And so I was like, well, for $500, I can put 7 chase lounges out by the pool, a couple of umbrellas. And now the tenants are excited to come out and enjoy the property.
And interact. So it increases their quality of life, their sense of community, happiness with being there, keeps them longer and demands perhaps a slightly higher rent.
Yeah. And on time usually too. If they enjoy living there, they want to pay you to keep living there. So
exactly. Yeah.
Yeah.
Oh, yeah. Well, that's
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Okay, cool. So over the last few years, there have been some major hiccups in the whole multifamily space. Yeah. Has that affected you guys or not so much?
Not our portfolio. Luckily, we got into some projects while it was coming down. One of our early ones was right in the beginning of it. That project, I'd tell you, is doing really well. We're managing it. We've been turning units well. Our rent has stayed we're basically hitting our pro forma. The other two, we definitely got discounts on. We bought one in Louisville, Kentucky with a group, and it was a brand new 2024 build, and the builder kind of needed his equity to get out and move on to his next project. So we negotiated a pretty good deal on that one. So right now, everything we're doing is positive cash flow. We're hitting our pro forma. When we're looking to purchase, we're obviously taking all this into consideration. We got, high-ish interest rates still. I think that'll be the case. In Phoenix, we still have a lot of inventory being delivered. So we're underwriting to some higher vacancies and competitions and concessions right now. But hey, I'm a cash flow investor. So I've done enough real estate deals that sometimes equity, as much as you plan for, it doesn't always happen.
Yeah.
But cash flow.
A lot of people have learned that hard lesson.
Yes.
Recently.
Yeah, exactly. Yeah, exactly. So it's, I always say hashtag equity happens, right? That's my new saying. But cash flow.
Hashtag equity happens.
Yeah. It just happens. Equity happens. Okay. But you can't control it. I mean, you can force value through value add stuff, like just the simple things of adding grills, and that'll force value. But when I look at a project, I don't look at my returns coming out of like it's going to go up so much in value in order to get it. So we look at the cash flow on it more than anything, and we underwrite the cash flow, because that great cash flow will get you through any market cycle.
Yeah, most definitely. So the appreciation, market appreciation, is kind of a bonus.
Yep.
It'll probably happen, but you're not counting on it. You're looking at cash flow. You're looking at depreciation. You're looking at mortgage data. You're looking at the stuff that you can exercise some control on.
Exactly. And with real estate, you can look at every number points to over time, it always goes up, right? So, but it definitely has its ups and downs. So today in Phoenix, if we underwrite something, it is cash flow oriented. We think the market's going to turn around there pretty strong, and we are going to project some good potential equity events, but I'm a long-term buyer. That's the other thing.
I was going to ask you. So what's the exit strategy for you, Matt? Where do you want to do with these?
Yeah. So I tend to lean towards the infinite return model, where we just buy it and refinance it. So
it makes sense, right? Because I mean, you're in the realtor business, broker business, you're self-employed basically.
Yep.
We don't have these, juicy pensions set up for us. We got to kind of create it. So that makes sense to me. The whole idea of getting rid of these cash cow properties makes very little sense.
Very little sense. Yeah. And listen, everything's always for sale at any time. That's the bottom line, but I think I look for the cash flow in long term. And what I like to do is and certainly now with the market where it's at, if we can buy something cheap enough and in 3 years refinance and start returning people's equity, you do one of two things. You reduce the risk.
Yeah.
Give people's money back, you reduce the risk, and eventually nobody has any equity. But I also believe that the investors got us here. They get to enjoy all the upside going forward. So even if I get return their equity, they keep getting checks, they keep getting income, and we just hold the property. I mean, I'd be fine if I buy a great property and pass it on to my kids. I mean, that'd be fine.
Why not?
So
yeah. That makes sense. So a lot of LPs and investors kind of got spoiled in the go times and not accustomed to that 1.5, 2, 3 year turnaround, double, triple, quadruple their money type thing. Got spoiled with that. How do you have conversations with investors these days and get them on board with this long-term buy and hold philosophy?
Yeah, it's interesting because it is a tough conversation right now to have. There's a lot of people that are a little gun shy. I think I just read an article this morning. Globe Street came out that there is a significant rise in capital chasing CRE again, commercial real estate. So I think they're coming back in, but it's a lot of it is just what you and I are talking about. Like, listen, what can we plan for? We can plan for cash flow. How can we attract tenants? The deal that we're underwriting right now, there's a lot of meat on the bone with rentals, but we're probably going to focus on occupancy more than just maximizing rents, because we're like, well, we know they have a lot of choices right now. So while we're going to raise rents, we're probably not going to raise it so high that we're going to blow people out and potentially have vacancies right now, just because, but in 2 years, we might be able to do that. So we're going to prioritize occupancy more than anything, because again, it's cash flow.
Cash flow.
So,
yeah, exactly. No, that makes a lot of sense. Okay, well, that's kind of part of the moving forward plan. What are the other goals for your multifamily business over the next year or two, Matt?
Yeah. So over the last couple of years, we've been able to scale up to about 600 units over 3 or 4 projects. It's been great. We're really enjoying it. So right now, we're really focusing on scaling. I think the opportunities now, and again, underwriting the cash flow is kind of the key. So I think if you can buy something in cash flow today, even with high interest rates and vacancies where they're at, think in the long term it'll work out well. So we're looking for LP partners is one. Always looking to join other teams. Couple of the deals, I'm a co-GP with a bunch of other guys that are great operators. So we're looking to do that. I'm looking for certain partners even within our company as well. So
Interesting. No,
Yeah.
makes a lot of sense. So Matt, it sounds like you're probably pretty grateful that your accountant gave you that wake up call a few years ago.
yeah, very happy. It's very good. Yeah. Well, it's great because it was me and my family members who are all brokers with us. We all started doing, my parents have gone in every deal that I've done with me as well. So, and a lot of my clients, it's the clients I work with are a lot of ultra high net worth individuals. So
Imagine. Yeah.
really what they're looking for is capital preservation and tax advantages. And I don't know of another asset on the planet that is as strong in those two areas as real estate is.
Especially with that big, beautiful bill that just came through.
Yeah.
Big-
As a windfall. Yeah, absolutely. So
Awesome, Matt. Well, I'm sure there's some folks listening or watching this who would like to connect with you, find out more about what you're up to.
you bet.
What's the best way for them to do that?
Well, everything, my website's the kind of central for everything. You get a hold of me there. So that's going to be www.veritasequity.net. My email is another one, and that's matt@veritasequity.net. So, but my website has everything. And I would even encourage you to join on my website. I have join the investor club out there, get on my list, see my emails, see my, market updates and monthly. I try not to blow everybody up with daily emails. I try to keep it limited to monthly or bi-monthly. But that's the best way to see what we're doing and what we're looking at. So
Good. Makes sense. Matt, hey, thanks for being on the show. It's been a lot of
you
fun.
bet. Thanks, Dave. Appreciate it.
All right, everybody, take care. We'll see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.